Welcome back to Investing Talk Podcast. Today, we're tackling a question that seems to be on a lot of people's minds. Is NexGen Energy a good time to buy now? We've gathered quite a stack of sources, research reports, market analysis, all that good stuff to really unpack this one for you. It's a unique company. Before we jump in, if you find what we do here valuable, please do consider subscribing, maybe give us a like, leave a comment. It genuinely helps us keep these conversations going. And hey, if there's a specific company you want us to look into next time, just drop it in the comments below. We'd also really appreciate it if you'd think about buying us a coffee. Definitely fuels these analyses.
It really does. And NexGen Energy, yeah, it's a fascinating one. It's almost a textbook example of, high risk, high reward, definitely not your average company analysis. Our sources really highlight how it sits in a pretty unique spot in the energy sector. We're going to explore what makes it stand out, but also crucially where the big question marks are.
All right, let's get started then. Maybe lay some groundwork with the fundamentals. What's the financial health looking like for NexGen Energy, especially given they're not actually making any money yet? No revenue at all.
Right.
That's quite something.
It is quite something, yeah. But the key thing our sources point out isn't just the zero revenue part. That's actually, pretty standard for a company at this exploration and development stage. The real question is how they're managing this phase. Looking at the numbers, they show a net loss around $194 million over the last 12 months. EPS, earnings per share, is negative, somewhere between -25 and -34 cents. Profit margins, 0, both gross and net. No surprise there. So fundamentally what this means is any future earnings are completely tied to getting their main project, the Rook I mine, up and running. And of course what happens with uranium prices is purely a bet on the future.
Okay, so if there's no money coming in, how are they paying for all this development? Are they piling on debt? What does that tell us about their stability?
Well, they do have debt. The debt-to-equity ratio is sitting around 47.6%. Now that's moderate, but it is increasing, which reflects them pushing forward with Rook I. It's crucial to understand they are consistently losing money on operations, negative free cash flow. Again, pretty typical for explorers burning cash. But, and this is impressive, our sources highlight they've successfully raised money through financing rounds. That suggests investors still believe in the long-term story.
So confidence is there, at least from some investors.
Exactly. But for you, the listener, watching their cash balance versus how fast they're spending it, the burn rate, that's absolutely critical. It's their lifeline right now.
Makes sense. So, okay, they're pre-production, burning cash. How do they stand out in this, competitive global energy market? What's their edge?
This is where it gets interesting. Their strategic advantage really comes down to the Rook I project. Many analysts consider it one of the world's best undeveloped uranium projects. And its location, that's a big plus. It's in Canada's Athabasca Basin.
Which is known for uranium, right?
Exactly. Globally significant. And the key is the high grade of the resource. Basically, they found a lot of high-quality, accessible uranium. That gives them a potential advantage over peers who might have lower grades or operate in, let's say, less stable regions. Sure, there's competition from established producers, but the quality and the potential long life of Rook I, that could give them a real cost advantage once they actually start mining. A potential game changer. Okay, moving on from fundamentals, which are, let's face it, challenging to look at in the traditional sense. How do you even value a company with no revenue, no earnings, negative cash flow? Do the usual valuation metrics just go out the window?
Pretty much, yeah. That's a really important point. Your standard price to earnings, price to sales ratios. Totally irrelevant here. Meaningless, actually. Same goes for things like discounted cash flow, DCF models. Very hard to do reliably without positive cash flow to project out.
So, what do people use? Well, what analysts in the market tend to focus on is the value of the resource itself, the uranium in the ground, and what's called future production optionality. You're not buying current profits. You're buying the option on potentially huge future profits if the mine gets built, if it runs efficiently, if uranium prices cooperate.
Like a lottery ticket almost, a very complicated, expensive lottery ticket.
Kinda, yeah. The potential prize is big, but the draw date is years away, and a lot has to go right. Our sources suggest methods like net asset value, NAV, calculations are common, trying to estimate future production, costs, applying a discount rate, also looking at what similar projects have sold for. But honestly, any fair value estimate right now is speculative, highly sensitive to assumptions about future uranium prices, build costs, timelines. It's definitely not a stock you can slap a simple ratio on. You're valuing potential, pure and simple.
That really clarifies the valuation challenge. Okay, so if fundamentals and traditional valuation are tricky, what about the technicals? What's the stock chart saying? Price action, trends?
Right, let's look at the chart. NexGen is currently trading around $6.92. But look at the 52-week range. $3.91 on the low end, $8.96 on the high end. That tells you right there, significant volatility.
Yeah, that's quite a swing.
Definitely. For some traders, that volatility is an opportunity, but it clearly signals it's a more speculative investment. Technically speaking, our sources see support around the $6.40 to $6.70 area. Interestingly, that lines up pretty well with both the 50-day and 200-day moving averages.
Okay, so potential floors there. What about resistance? Where's the ceiling?
Resistance looks to be up near those recent highs, $8.50 to maybe just under $9. Forecasts, they're all over the place, honestly. Some see it potentially going to $10, others much higher, like $16 plus by the end of next year. Wide range, reflecting that uncertainty.
So the trend seems generally up, based on the moving averages, but maybe hitting a ceiling recently. What other indicators are flashing?
Well, the RSI, the Relative Strength Index, is around 55. That's pretty neutral. Not overbought, not oversold, just neutral. But crucially, the stock is trading above both those key moving averages, the 50-day and 200-day. That generally points to an underlying uptrend. Positive momentum, technically.
What? I sense a but.
But the beta is 1.73.
Meaning much more volatile than the market overall.
Exactly. If the general market moves 1%, NexGen tends to move about 1.73%.
Yeah.
So you need to be ready for bigger swings, both up and down. Momentum is positive, yeah, but sentiment in this sector can turn on a dime. You need a strong stomach.
Got it. Okay, let's shift to news and sentiment. What's the latest buzz? How are the analysts, the pros, viewing NexGen right now? Any insider moves?
The analyst consensus is actually quite strong. It's a buy rating from the 7 analysts covering it that our sources track. And the price targets are interesting. They range from $11.50 up to $50. The average is around $13.50.
Wow. Okay, so from current levels around $7, that implies a lot of potential upside, like 40% to over 100%.
That's what they're suggesting, yeah. It's a pretty bullish stance from the analyst community based on that resource quality we talked about. Recent news is mostly focused on updates about the Rook I project development, steady progress reports. One thing that did catch attention, mentioned in our sources, was a director selling some shares recently, about $450,000 worth.
Insider selling. How should people read that?
Well, it can be seen as negative, obviously, but it's not always a clear signal. Could be for personal reasons, diversification, who knows? It's just one director, one sale. It's definitely a data point to be aware of, but maybe not a reason to panic on its own.
And general market mood.
Social media sentiment seems kind of neutral on the stock itself, but the broader market fear and greed index is currently showing fear. It's at 39. So while analysts might be bullish on NexGen specifically, the overall market is feeling cautious. That can sometimes be an opportunity, but it adds another layer of risk too.
Okay, looking ahead then, what are the big things to watch for? The catalysts, positive or negative, that could really move this stock, short-term and, maybe more importantly, long-term.
Short-term, definitely keep an eye on any announcements. Earnings calls, though again, they'll mostly talk about spending, not earning. The last one was August 7th, 2025. More critical will be news on the Rook I project itself, permitting updates, engineering milestones, any signs of progress or delays. That's key. And of course, the uranium spot price. Any significant moves there will directly impact sentiment towards NexGen.
And the bigger picture, long-term drivers.
Long-term, it's all about actually getting into production. That's the ultimate goal. The big re-rating event, tied to that is getting all the necessary regulatory approvals. That can be a long, complex road for any mine. Also, watch for M&A activity in the uranium space. Consolidation happens. Could NexGen be a target? Or an acquirer someday? Maybe. And fundamentally, it all comes back to global demand for uranium, more nuclear power plants being built, supportive government policies, geopolitical shifts affecting supply. All of that feeds into NexGen's long-term valuation. It's really a bet on that whole nuclear energy narrative.
Okay, so we've covered a lot. The shaky fundamentals, but huge potential asset, the valuation puzzle, the volatile charts, the bullish analysts. What are the absolute main risks someone needs to understand cold if they're thinking about NexGen? Biggest red flags?
Number one, I'd say, is execution risk. Stock-specific risk. Can they actually build this mine on time, on budget? Construction delays happen. Cost overruns are almost expected in mining. There's even the risk, however small, that they never reach positive cash flow if things go badly wrong. And because they're not making money, that access to capital we talked about, it's absolutely vital. If funding dries up for some reason, the project stalls. That's a huge risk.
Right. Project-specific risks. What about broader ones?
Then you have the market and sector risks.
Yeah.
Uranium prices are notoriously volatile. Big swings are common. Global energy policy can change. Environmental regulations can become stricter. A general market crash would likely hit speculative stocks like NexGen harder than established producers. Remember that beta, 1.73. It cuts both ways. These exploration stage stocks just have much bigger price swings. You need to be truly comfortable with that volatility.
Okay, so wrapping this all up, we've gone through the sources, the data points. What's the bottom line for our listener asking, is NexGen a good time to buy now? What's the takeaway?
Well, pulling it all together from our sources, we rate NexGen maybe a 6.5 out of 10 right now. The upside potential is definitely there. It offers huge leverage to uranium prices if they rise. And that Rook-I project, if it succeeds, could lead to a major revaluation of the stock. Analysts are clearly seeing that potential.
But that 6.5 suggests significant caveats.
Exactly. The but is huge here. No revenue, ongoing losses, that recent insider sale, the chart volatility, it all adds up to above average risk, significantly above average. Valuing it is tough, almost speculative, because there's no cash flow today. So honestly, this stock is really only suitable for investors who understand and are comfortable with high-risk, high-reward scenarios, specifically in pre-production mining. It is not a safe bet.
And this leads to a really key point, I think. Sure, you could try to trade the short-term swings, given the volatility and momentum, but the sources really seem to agree that the real potential payoff here isn't next week or next month. It's years down the line. It depends on them successfully de-risking the project, building it, permitting it, proving the economics, and it depends on a sustained upturn in the whole uranium market. It's a long game.
Absolutely. Which brings the crucial question back to you, the listener. Are you investing for that long-term vision? Are you prepared to wait potentially years for the uranium market story and the Rook-I mine to hopefully play out? Or are you looking for something with more near-term certainty, knowing your own time frame, your own tolerance for risk? That's absolutely essential before touching a stock like NexGen Energy. It really forces you to think about why you're investing.
Yeah, really think about that long game. Imagine what happens if nuclear power truly takes off globally as part of the clean energy shift. That's the kind of macro trend this investment plugs into. Lots to consider there. We definitely encourage you to keep digging into this fascinating corner of the market. Thanks for tuning in to Investing Talk podcast, and we'll catch you next time.